Welcome, everyone. Today we are looking at Topic 7 in your SS1 accounting series, Ledger Accounts. The ledger is the principal book of accounts. It is where all transactions are finally recorded. This topic is guaranteed to appear in your examinations. You must understand how to post transactions to the ledger and how to balance accounts. Pay close attention. Let us begin. First, let me explain what a ledger is. A ledger is the principal book of accounts. It contains all the accounts of a business. It is the final destination for all transactions. Transactions are first recorded in the books of original entry. They are then posted to the ledger. The ledger is part of the double entry system. It contains personal accounts, real accounts, and nominal accounts. The ledger provides a complete record of all transactions. It is used to prepare the trial balance and financial statements. The ledger is sometimes called the Book of Final Entry. This is because it is the last place where transactions are recorded. Understanding the ledger is essential for understanding the accounting process. This is a key concept. Now let me explain the importance of the ledger. The ledger is important for several reasons. First, it provides a complete record. It contains all the accounts of a business. Second, it helps to prepare financial statements. The ledger is used to prepare the trial balance, income statement, and balance sheet. Third, it helps to detect errors. It allows for checking and verification. Fourth, it helps to prevent fraud. It creates a clear audit trail. Fifth, it helps to organize information. It groups transactions by account. Sixth, it helps to make decisions. It provides information for management. Understanding the importance of the ledger is essential for understanding the accounting process. This is frequently tested. Now let me explain the format of a ledger account. A ledger account is a T account. It has two sides. The left side is the debit side. The right side is the credit side. The account has a title at the top. The title is the name of the account. The debit side records debits. The credit side records credits. Each side has columns for date, particulars, folio, and amount. The date column records the date of the transaction. The particulars column records a brief description. The folio column records the page number of the book of original entry. The amount column records the monetary value. The difference between the two sides is the balance. If the debit side is higher, the account has a debit balance. If the credit side is higher, the account has a credit balance. Understanding the format of a ledger account is essential for posting transactions. This is a practical skill. Now let me explain the types of accounts in the ledger. There are three types of accounts. The first type is personal accounts. These are accounts for individuals and organizations. Examples include debtors, creditors, and capital. The second type is real accounts. These are accounts for tangible assets. Examples include cash, land, buildings, and machinery. The third type is nominal accounts. These are accounts for expenses, losses, income, and gains. Examples include rent, salaries, sales, and purchases. Personal accounts are further divided into debtors and creditors. Debtors are people who owe the business money. Creditors are people to whom the business owes money. Understanding the types of accounts is essential for applying the rules of debit and credit. This is frequently tested. Now, let me explain the rules of debit and credit for ledger accounts. The rules depend on the type of account. For personal accounts, debit the receiver and credit the giver. When a debtor pays money, debit the cash account and credit the debtor's account. When a creditor is paid, debit the creditor's account and credit the cash account. For real accounts, debit what comes in and credit what goes out. When the business buys an asset, debit the asset account and credit the cash account. When the business sells an asset, debit the cash account and credit the asset account. For nominal accounts, debit all expenses and losses and credit all income and gains. When the business pays rent, debit the rent account and credit the cash account. When the business makes a sale, debit the cash account and credit the sales account. Understanding these rules is essential for posting transactions correctly. This is frequently tested. Now let me explain the posting process. Posting is the process of transferring transactions from the books of original entry to the ledger. Each transaction is posted to the relevant accounts. The debit side of the transaction is posted to the debit side of the account. The credit side of the transaction is posted to the credit side of the account. The posting process is done regularly. It is done daily, weekly, or monthly. The posting process is essential for maintaining accurate records. It ensures that all transactions are recorded in the correct accounts. The posting process involves several steps. The first step is to identify the accounts affected. The second step is to determine the effect on each account. The third step is to determine whether to debit or credit each account. The fourth step is to post the transaction to the ledger. Understanding the posting process is essential for maintaining the ledger. This is a key skill. Now, let me explain balancing of ledger accounts. Balancing is the process of calculating the balance of an account. It is done at the end of each period. The total of the debit side is calculated. The total of the credit side is calculated. The difference between the two totals is the balance. If the debit total is higher, the account has a debit balance. If the credit total is higher, the account has a credit balance. The balance is written on the side with the lower total. It is then carried forward to the next period. Balancing ensures that the accounts are up to date. It is essential for preparing the trial balance. The balancing process involves several steps. The first step is to add up the debit side. The second step is to add up the credit side. The third step is to calculate the difference. The fourth step is to enter the balance. Understanding balancing is essential for maintaining the ledger. This is frequently tested. Now let me explain the difference between the ledger and the books of original entry. The ledger and the books of original entry are different. The books of original entry are the first place where transactions are recorded. The ledger is the final place where transactions are recorded. The books of original entry are memorandum records. The ledger is part of the double entry system. The books of original entry are used to record details. The ledger is used to summarize transactions. The books of original entry are posted to the ledger. The books of original entry are called subsidiary books. The ledger is called the principal book. The books of original entry are not part of the double entry system. The ledger is part of the double entry system. Understanding this difference is essential for understanding the accounting process. This is frequently tested. Now, let me explain the difference between the general ledger and the subsidiary ledger. The general ledger contains all the accounts of a business. It is the main ledger. The subsidiary ledger contains details of individual accounts. It is used for personal accounts. The subsidiary ledger is also called the personal ledger. The general ledger contains real and nominal accounts. The subsidiary ledger contains personal accounts. The general ledger is used to prepare financial statements. The subsidiary ledger is used to provide details. The total of the subsidiary ledger equals the control account in the general ledger. Understanding this difference is essential for understanding the structure of the ledger. This is a key concept. Now, let me explain the advantages of the ledger. The ledger has many advantages. The first advantage is completeness. It provides a complete record of all transactions. The second advantage is accuracy. It helps to prevent errors. The third advantage is control. It provides control over financial information. The fourth advantage is information. It provides detailed information about each account. The fifth advantage is decision-making. It provides information for decision-making. The sixth advantage is financial statements. It is used to prepare financial statements. Understanding the advantages of the ledger is essential for understanding why it is used. This is frequently tested. Now, let me explain the disadvantages of the ledger. The ledger also has some disadvantages. The first disadvantage is complexity. It can be complex to maintain. The second disadvantage is cost. It costs money to maintain. The third disadvantage is time. It takes time to maintain. The fourth disadvantage is errors. Errors can still occur in the ledger. The fifth disadvantage is space. It requires space for storage. Understanding the disadvantages of the ledger is essential for a balanced view. This is a key concept. Now, let me give you sample exam questions to prepare you for your test. What is a ledger? A ledger is the principal book of accounts. What are the types of accounts in the ledger? Personal accounts, real accounts, and nominal accounts. What is posting? Posting is the process of transferring transactions from the books of original entry to the ledger. How is a ledger account balanced? The total of the debit side and the total of the credit side are calculated. The difference is the balance. Explain the difference between the ledger and the books of original entry. The books of original entry are the first place where transactions are recorded. The ledger is the final place where transactions are recorded. State the rules of debit and credit for personal accounts. Debit the receiver and credit the giver. State the rules of debit and credit for real accounts. Debit what comes in and credit what goes out. State the rules of debit and credit for nominal accounts. Debit all expenses and losses and credit all income and gains. Let me summarize everything we have covered today. A ledger is the principal book of accounts. It contains all the accounts of a business. A ledger account is a T account. It has a debit side and a credit side. There are three types of accounts: personal accounts, real accounts, and nominal accounts. Posting is the transfer of transactions from the books of original entry to the ledger. Balancing is the calculation of the balance of an account. The ledger is different from the books of original entry. The books of original entry are the first place where transactions are recorded. The ledger is the final place where transactions are recorded. The ledger has many advantages. It provides completeness, accuracy, control, and information. Understanding ledger accounts is essential for accounting. This is Topic 7 in your SS1 accounting series. Study it well. It is guaranteed to appear in your examinations. Well done.